Well, good. This is always a fun part of the program where we get to grill the VCs on what kind of deals they're seeing and what kind of deals they're financing and what's the outlook for VC and how angels are disrupting VC and all those kind of great issues. So I'd like to ask each one of the panelists to talk about how they find the venture landscape right now. And how it might compare to maybe a couple years ago, particularly with it as regarding China-U.S. cross-border.
Alex Hartigan, Steamboat Ventures. My fund, we're sector focused, so we only invest in digital media, consumer tech. And so I'm spending a lot of time looking at both the consumer tech side and what we call the enabling technology side, so ad tech, analytics, media cloud stuff. Clearly, I think, I spent the past 7 years in China, recently returned back to the US this past summer, and focusing on US investments now. I have 2 partners based in Shanghai. But in terms of what I'm seeing initially coming back to the US is clearly the consumer side is there's a lot of hype and a lot of activity. You have these massive acquisitions happening, or not happening in Snapchat's case. And so there's a lot of high valuations, unproven business models happening on the consumer side. But that said, I think on the enabling tech side, I'm seeing some very interesting companies emerge in the ad tech space, and as you're seeing on the social ad tech side, mobile ad tech side, where you're seeing sizable companies proving out business models, getting to large scale, and some interesting technologies that are emerging, as well as exits and M&A and the IPO side that are reasonable. So I'm seeing sort of there's the opportunities, but there's also, you have to watch out for the pitfalls and some of the frothiness out there.
Hans, I think you're next in line.
Okay, my profile is quite similar to Alex. I've been investing in China the last 8 years, just moved back last summer as well. So you started seeing some kind of trend going on. More VCs and more entrepreneurs from China who have been in China for a while are looking at either relocating back to the Bay Area or put their family in Hong Kong or Singapore, but still do a lot of China investing. So I was, in my previous firm, I was an early investor in Xiaomi. So I have 2 homey phones with me. I use them very often here. And helped to recruit Hugo to join Xiaomi as well, leading Android. I don't think we should do that. And GGB is an early investment in Alibaba. We helped Alibaba to invest in Quixi, which is a portfolio company of WestSummit as well. You just start seeing a lot more activities across border. And over the last 10 years, it has been China-US separate, copy to China with lots of localization kind of model. That playbook is changing, and that's why Alex and I and David are investing in the space. We see a lot more cross-border teams forming. Wish and Canport, especially Wish, is a very good example. You guys heard from Peter today, and he has a co-founder, Danny, that's originally from China. Canport has a lot of Chinese-related investors who they get the model of how to monetize traffic in mobile gaming. So you will see a lot more of that going forward. And in the O2O space, something like Uber, not in the sensitive media space, will expand to China, we'll try to, because it's something that the government is not going to be as restrictive on. Because China needs help on transportation. There was certain challenges in different cities, but overall, directionally, that's where China needs more help on. So you provide some opportunity for US startups to expand into. We just closed around, participate in Flipboard's most recent activity, and China is the 2nd largest market for Flipboard. So you also see US companies, which historically have failed in China, have some chance because of mobile in the next 10 years. And that's why we're very excited about that. On a larger scale, valuation is high. Everybody knows that. Uber, when the round got done at over $3 billion last summer, everyone thought it was crazy. Now, run rate for Uber has tripled since that round. People don't think that valuation is as crazy anymore. It got more revenue faster than Twitter did, and people started thinking differently about O2O. But how long can this bull market last? I bought stocks for my own portfolio, like Uber and Autohome, towards the end of last year, they've done well, but every day I'm watching the price. If they drop more than say 10-50%, I may sell. So people are definitely cautiously optimistic and keep on watching what's going on. And roughly about 1/3 of my assets in stock and bonds, the rest are in cash right now, because I want to see, if there's a major correction going on, I can start participating. Having said that, Tencent, because of WeChat, over the last 1 year alone, doubled the market cap. It's very, very interesting times. And there's nothing else I want to do right now than what I'm doing, because it's so fun and interesting. Lots of stuff going on in both economies, and these are the two largest mobile markets in the world.
Jim Boettcher?
Okay, hello everybody, Jim Boettcher. I was asked by Liam Casey, the founder and CEO of PCH, to welcome you all here tonight. I met Liam at CES in 2005, and we
Yeah,
began.
Liam is actually here tonight.
Yes, he
I
is.
think he's hiding around the corner there. Come on, say
yeah.
hey, Liam.
There he is.
Okay, all right.
He's the man responsible for us being here tonight.
So we worked together for a couple of years before leading the Series A in 2008, and it's been a real rocket ride since then. And this is a manifestation of the vision of Liam and how this there's a brave new world driven by the Internet of Things, the mobile platform and mobile devices and cloud computing and SaaS platforms. And these are creating tremendous opportunities for new entrepreneurs to come up with hardware ideas and come to a company like PCH with basically a concept and an idea, and they can walk them through the conceptualization, the prototyping, the manufacturing for manufacturability, the design, find the right supply chain out of China, even to design packaging and shipping, and provide even some working capital financing. So somebody can have an idea today and be shipping a product in a matter of months, whereas before hardware was a very difficult thing to do. So I think this is a bit of a new paradigm, and we're very excited to have this new platform here in San Francisco with the Highway 1 incubator as well as an accelerator, and of course Line Labs, which was the industrial design outfit that we acquired. I think the Internet of Things is an interesting area that's creating opportunities both in the US and in China. And one of the things I'm seeing is some transfer of ideas and technologies from China now to the US, because we're working with a medical telemedicine company that has a cloud computing platform in China. They're working in hospitals, they're working with Shanghai Pharma in 300 stores for trials, and they're working with retirement homes. And they provide in-home monitoring. In the Shanghai Pharma stores, they work with the pharmacies, work with the nutritionists, and work to provide medical devices. These endpoint devices then are communicated to the cloud platform and go to the doctor or relative, depending on the need. PCH has a company called Lively, which does medical devices for the homes and the elderly, where you can put sensors around the house, and if your mother doesn't open her refrigerator every day, or she falls or something like that, the loved ones are immediately notified. But I think, Meridian Medical Networks is the company in China, but because they got so much traction in China, because you don't have the complexities of the insurance and the hospitals and the silos here, we're actually doing great in China. We're going to bring that platform back, and now we're doing some interesting partnerships in the US. So it was much easier to prove the model in China and bring it back to the US. The other area I think that we're seeing a lot, I do a lot in environmental and clean tech, which isn't necessarily a popular thing these days, but because of the environmental problems in China, there's a tremendous need, and all of the party secretaries and the mayors and the governors and all of the leaders of the ministries are encouraged to help come to the U.S. or globally find new technologies that they can bring back and set up supply chains and help remediate the environmental problems in China. So Internet of Things, mobile devices, and I think a lot of environmental technology transfer are very exciting.
Good evening, my name is David Lamb. I'm with WestSummit Capital. We were started about almost 5 years ago by one of the sovereign funds in China to really to focus on the cross-border aspect of investing in the technology space. We've been here in Silicon Valley, and half our team is also in China, and really funding companies at the growth stage that are looking primarily to go from Silicon Valley into the China market. Though we do have a number of companies in China that are accessing global markets. Sector-wise, we see, as you've heard already, very, very exciting opportunities in internet. We have a couple investments in the gaming sector here in Silicon Valley, one called Unity, which is in the game engine, as well as a company called Twitch, which is in the live streaming space. Both of those companies have pretty exciting ambitions and activities in China. But one of the areas that we've spent quite a bit of time in as well is on the SaaS side and in the software infrastructure space. I think that, as Hans said, there have been a number of companies in the US that have failed in moving to China. That is less the case for enterprise software companies, where there's just not as much competition out there. And so we've seen some growth stage companies from here be very successful in accessing the China market. And we're pretty excited about that market as well. We have some staff that are more business development oriented, flying back and forth between China and the US, and they've got their hands full because there's just a tremendous amount of interest. And it continues to surprise us in a good way how much enthusiasm there is for companies here in Silicon Valley to go to China, and also how welcoming China is for many companies that are leaders in their space. And I think one final comment here is that I think Silicon Valley has really established itself as the innovation capital of the world. And I think China, over the last 10 years as well, has established itself as a massive technology market and a consumer of technologies, both domestic and foreign. So I think what we're seeing now is an opportunity for both sides to play out to their strengths, and that's why all of us here on the stage are doing what we're doing.
Cross-border, right. Chris Evdemon from Innovation Works.
Yeah, myself, just like Alex and Hans, I've spent the last 6 years in Beijing, and I just arrived here for the last couple of months. Up until about a year ago, Innovation Works is very much a truly early stage, almost entirely China-focused venture fund with a large incubation space and a very large team of professionals, not just investment professionals, but a little bit like Andreessen Horowitz over here, offering a lot of different services to our portfolio companies in-house. So up until a year ago, 100% of our activity was focused on the domestic China market. But we started realizing that while several spaces were cutthroat competitive and are still today cutthroat competitive, especially in the early stage, there were a lot of sectors that were underserved or almost entirely overlooked by Chinese entrepreneurs for a variety of reasons, different in each sector's case. So we thought we should start a small experimental program, maybe 5% or 10% of our activity and of our funds. In total, we managed about $500 million to be put here into the market with a China cross-border angle in these overlooked and underserved spaces. These are, David already suggested, one of them that we see here is obviously the B2B software as a service productivity tools and real-time communication tools for the small to medium-sized enterprise. There's no Salesforce.com in China. There are no mini CRM tools. There are no in-browser or completely browser-based communication tools for people working in small to medium-sized, in the long tail of the enterprise. And there are good reasons why it hasn't happened so far in China, but we do feel that space is coming. And we cannot necessarily afford to wait until the Chinese entrepreneurs are starting to flock that space. A second space that we are very, very interested in with a very clear China cross-border angle is actually all kinds of developer tools, especially mobile developer tools. People forget that actually China has the largest mobile developer community in the world, and these guys are not only developing for the domestic China market, but they're actually developing for the entire world. A lot of the things you're using on a day-to-day basis, you wouldn't know it necessarily, but they're actually being developed by a team of 10, 15, 20 people sitting in a rusty apartment in Beijing or in Shanghai or wherever else in China. These guys need tools, and a lot of the innovation around, for example, the next generation of analytics, mobile A/B testing, parse type of SDKs are actually being developed here, but they have a huge potential marketplace in China in terms of that developer community in China. Another sector we are very, very interested in with a clear, again, cross-border angle is connected devices. We had a couple of speakers today. Very simple reason, and the first low-hanging fruit is that actually a lot of the things are being designed here, but they're designed by people who, on average, have no clue about how to manufacture in China. I'm sure under this roof, this is a case study that they understand a lot. That's why they built this place. So a lot of very creative design in terms of new devices across all kinds of types of devices, but very little experience about how to go and manufacture these things in China, and a lot of problems. We have one such portfolio company. Vlad is here today from Swivel. He just came back right from Shenzhen, and if I could pass the microphone and he could speak for the next two hours about all the troubles and issues and challenges that they are facing building their very smart and elegant device over there. At some point also, people should not forget that the Chinese consumer market is going to be the largest consumer market in the world for all these kinds of devices. So the low-hanging fruit at the moment is actually going there to assist them to manufacture, and then step number 2 will be to help them actually start selling these devices to the China consumer market. Last but not least, online education. In the last few weeks or a couple of months, actually, this sector is starting to finally take off in China, in the domestic China market, but it's still so much geared around English language training or some international certifications for specific skills like accounting, finance, and so on. And there's a lot of activity online and offline in this respect, but there's a wide spectrum of online education that hasn't even started. So anything that is around specific, tangible, post-secondary skill set that helps you get a better job or improve your current job, and it's content-oriented, is something that we find extremely interesting and very portable to the Chinese market. So I've been sent here as 80% of my job to do that. There is the other angle also, which I think Hans alluded to, more and more mature startups or pre-IPO stage startups, and of course all the publicly listed companies in the Chinese internet space, they're finally coming out. So we also wanted to have a small team over here to use as a soft landing spot and as a resource pool for our portfolio companies who are now reaching this stage.
Well, I feel kind of left out. I think I'm the only person who hasn't relocated from China in the last 6 months. My name is Nazar Yasin with Rise Capital. It's a firm that invests in internet companies in emerging markets, so the BRIC markets and frontier markets as well. Started Rise about 9 months ago, left my prior firm, Tiger Global, before that, where I led a number of our investments in those markets, in China, other emerging markets in the US. One company, YY, which Alex, myself, and Hans's partner, Jenny, all sat on the board of. That was a fun time and a happy ending for everybody. Fantastic company. Having done that, and then I used to run the largest social network in Russia, which we sold to Mail.ru. So having invested and run companies in these markets, including in the US, it's been interesting to sort of see what's going on with China and compare and contrast it to some of these other markets and the US. I think there's some interesting pros and cons to China. On the pro side, fantastic innovation coming out of China, really fantastic. I mean, you see that from some of the public companies now, the YYs of the world, Tencent, Alibaba, which is not yet public, but will be soon, we expect. And a lot of private companies as well, the UC Webs of the world. Really fantastic, innovative companies. I think it's pretty clear in my mind that having, kind of gone across all these markets for the better part of the last decade, while, other markets like India, Russia, Brazil are innovative as well, I think the 3 real innovation clusters globally today are clearly the Valley, China, and Israel, in my mind. Those are the 3 sort of centers of innovation. So that's a huge plus in China's column. Another huge plus is obviously just the market size. I mean, it's a remarkably large market, and the internet plays a disproportionate role in China as it does in other emerging markets. So, case in point, you consider Alibaba versus Amazon.com. Alibaba does twice the revenue. China's economy is 1/3 the size of the US. So on a like-for-like basis, Alibaba is 6 times as relevant in China as Amazon is in the US. Insane. If you live in the US and you're a Prime customer and you're shopping on Zappos and Divers.com, and it's such a pervasive part of your life, and Alibaba is 6 times more relevant in China. So, tremendous market opportunity in China. So you combine that innovation with that market opportunity, it's fantastic. I think, what concerns me though, maybe I'm just kind of chicken a little bit, is just the valuations in China and in the U.S. to a certain extent. While large market opportunities are great, eventually, sort of putting my public market investor hat on, like I used to do a Tiger a little bit, and a Goldman before that. It's eventually fundamentals matter, right? So eventually you've got to be generating some profit, and that concerns me that private market valuations in China have certainly crept up and have stayed quite punchy. I'd say that public market valuations are more or less reasonable if companies are growing the bottom line at 70% year over year, and they're generating profits. Then a 70x multiple on those revenues, on those profits is pretty reasonable, right? Given the growth, you're getting rewarded for the growth in profits. So, as an investor, you buy cash flow, right? The private market valuations concern me in China. They concern me in the U.S. as well. Maybe it's just because I see much lower valuations on a relative basis in other emerging markets. But that would be sort of my high-level comment there. The other negative I would say is just from a competitive perspective, doing deals. I would say that I've been impressed with. And I'd be curious for you guys' perspective too. Just how active and sort of plugged in the venture investing operations of Tencent and Alibaba and Baidu have been in China. And so to a certain extent, if you're a financial investor and you're approaching a company there and you say, hey, I'll give you some money. I'm a pretty smart guy, I can help you with some connections and stuff like that. Alibaba shows up and says, hi, I can give you Alipay and connect you with a few 100 million people. It's can make things a little challenging there. But aside from that, I mean, really phenomenal innovation coming out of there and great market opportunity. So I'll just pause there.
Mavis, what are you seeing in terms of the investment flows? China, U.S., U.S., China.
Well, I'm Mavis Yi from Nixon Peabody. So unlike most of the panelists, I am not a VC or an investor. I'm an attorney and I work primarily.
Yeah, but you're a deal maker.
I am. I try to be. And so, but I do represent the companies that take the investments. And I would say what we are seeing, and we are of course the beneficiaries of these high valuations. You'd asked about the influence of angels, and that's what we're seeing a lot. Angels both in the U.S. and China, not necessarily VC funds, but with the higher valuations, investors are trying to get in obviously earlier. And so we're getting a lot of interest, or my companies are, from these investors, not from the traditional investors that you would see, but more from perhaps private families or people who've had very, very good successes in their own companies. So yes, we're definitely seeing an influx of investors from both areas.
So what about crowdfunding? Is that having an impact as well on the VC model?
Well, crowdfunding right now is only the product and reward-based crowdfunding. But once the equity crowdfunding comes into full play, which should hopefully be this year, we're going to see an explosion of even more startups. And I think you're seeing a lot of the platforms, being put in place now to address that. And so startups are preparing for it. You see the success of Indiegogo and Kickstarter. And once the equity crowdfunding rules come into play, it's going to be open market for all the startups, especially in Silicon Valley and San Francisco.
So with this new competition from, if you could call it competition from the angels and the crowd group, what do you think is the outlook for the VC model? Is the VC model going to continue to thrive and prosper and be the catalyst behind the next Alibaba, Tencent, Baidu, Ren, whatever, Xiaomi, YY?
Yeah, I guess I'll go first. I don't really see it, negatively impacting the VC model much at all, really. You know, while it may make it harder for an angel investor to get in on a deal if that, you know, $0 in revenues and 0 users entrepreneur is raising money from the crowd as opposed to an angel, that can make it harder. But really, as a VC, if you're the Series A guy, and particularly if you're the Series B guy like me, if you're the Series A guy, that just kind of creates a lot more opportunities to potentially deploy your capital in. Now, what that does do is lead, you know, help accelerate or, you know, help compound that Series A crunch, so to speak. There's more companies out there, and a few of them are getting funded by the Series A guy. So, you know, at the end of the day, I just think it's kind of more of a buyer's market. You know, it creates a little bit more of a buyer's market from a VC perspective.
Any other comments on this? If not, I'll go on.
I also don't see it as a negative at all. I think what Innovation Works starts to invest from seed stage, so we're a little different in this respect. We would like to get in together with angels or be the angel ourselves, but I would like again to remind people of the value of the notion of smart money, right, and the value add beyond the capital. When it comes to equity crowdfunding that we just discussed, for example, this is something that may allow some companies in the long tail that would otherwise find it extremely hard to raise capital to do so. But I think very quickly entrepreneurs are going to understand that having a roster of 100 investors, you know, at their seed stage with $1,000 or $3,000 or $5,000 each, completely impersonal and absolutely no sense of value add, you know, as an investor, is not exactly workable for them or something that actually solves problems rather than mostly creates. But there are going to be some otherwise unfundable or very difficult to fund projects that are actually going to get money this way. I think the more serious, the more seasoned, the more savvy entrepreneurs will still look for angel investors, seed stage investors, early stage VCs that can actually offer a lot more than just a check. They usually know exactly what they want and where to get it. And by the way, it doesn't really matter what the brand of the VC or what the firm is called. If it's called Sequoia, Klein & Perkins, GGV, Innovation Works, whatever. What actually matters is the individual that works with you. Because for every deal, there is one partner and plus maybe another associate or so on that works with you, and it's all about what these specific individuals can bring to the table and not what the whole aura of the fund or brand name means.
I'd just like to compliment Rebecca on picking the early stage companies today, because they all had quite high quality early stage investors, and we're very impressed by the way they networked around and found those people. I think Indiegogo and Kickstarter have very valid usefulness in terms of helping the potential customers of these products that are being developed get feedback about what they like, what they don't like, and voting, if you will, with their money. On the other hand, I think crowdfunding is actually absolutely terrifying, because a company like Angels List is raising money potentially from doctors and dentists in Des Moines, Iowa, for a startup company where the chances of success are probably 5% because there's so many of them now around. And why the SEC would allow that to happen is beyond me. And it certainly seems like a sign of a bubble. I don't know, what does our lawyer lady down there think about this?
You raised very good points about the equity crowdfunding, and that's why it has not been implemented yet. So just a distinction for most people who may not be aware, Indiegogo and Kickstarter is a product or goods crowdfunding. So you actually buy the product or service or good, but you actually don't own equity in the company. And I think that's a big distinction that people need to understand. There is no equity crowdfunding yet, just because the whole issue of, do people really know what they're buying? I do think that the product crowdfunding is good too, because it gets publicity to companies that need it. In addition, I think it does weed out companies that maybe they came up with an idea, and if there's no market for it, they go back to a drawing board. So it's a really good, efficient way for companies to really understand where their market is. As for equity crowdfunding, I completely agree. There is definitely downsides to having, 200 stockholders, before you even go out and get your financing. But I mean, the whole impetus of equity crowdfunding, once it is in place, is to provide alternative vehicles. So it obviously won't replace seed or VC or angel investing. It just is a ability to help companies that would not be able to get funding reach, a fundable stage. But yes, there are big issues with it.
When are we going to see, we have all these investors up here who have done all these hit deals. When are we going to see the next, I don't know, YY was very successful when it went public on NASDAQ. When are we going to see the next one like that? Jim is pointing to PCH International. Okay, of course he would, but Hans, in your portfolio, anything?
I think it's in GGV, the next one that has a shot probably is Tung. That's very big on mobile gaming, providing probably the largest independent mobile gaming platform out there in China now. So it will be interesting. One of my former colleagues, investment Yangpu, could be interesting because Tencent investing in them. And obviously Tiger is involved in JD now with Tencent's investment. It gets really interesting. And what's interesting about China is that even though there are a lot of big boys around, they're ferocity. They fight against each other. Increasingly because mobile, it's just fascinating. A lot of people here, I'm sure, know WeChat's red pocket, red envelope campaign over Chinese New Year, signing up over 200 million users on that WePay in the span of a few days, which took Alibaba about 7-8 years to reach that size for Alipay. That's just astounding. And then GSR investing in Didi Taxi, which is the fastest growing mobile app in China outside of WeChat. And once WeChat traffic, is pumping to Didi, daily volume, I think, grew by 10x to over 100,000 taxi bookings a day. Just those kind of numbers are just mind-boggling, and it's great. And all the big boys, because they're fighting each other, they want to get startups that have domain expertise or a category leading position and pump more traffic to them to increase more usage. As the O2O gets more robust in China, as well as in the US, you should see a lot of interesting stuff happening.
Alex?
Yeah, we're also investors in Qikong. We have high hopes for them. The other one in our portfolio, it's actually a US-based company with global operations, is GoPro. We're an early investor in that company and high-growing company and very exciting. And I think a lot of the wearable tech companies are obviously keeping an eye on this company and seeing how it goes out and it trades. But I think that was a very exciting one for all of us to watch.
So I think everybody is watching the China economic slowdown, and I'm just wondering what kind of impact you think that's having on the tech economy. Anyone? David?
I'll take the crack first. I mean, if anything, I remember when I went to China in 2005, the secret sauce when you invest in China is that you got to have local relationships. You got to have lots of government contacts. You got to guanxi. A lot of stuff is offline related. Man, in the last 5 years, mobile just changed everything. All the banks are scared about Alipay and WeChat coming into the space. Retailers are losing volume to losing even traffic to Taobao and Tmall. Tmall's and Taobao's combined revenue any given special promotion day, especially on November 11th or December 12th, is bigger than U.S. Black Monday sales after Thanksgiving or after Christmas. It's amazing how much volume is moving from offline to online. And who would have thought it was possible? 10 years ago, I remember a lot of US VC think that e-commerce China is way too early. Payment issue, lack of trust, and transportation. I mean, there are like 5, 6, 7 issues. No one thought that today Tmall plus Taobao has more GMV than Amazon and eBay combined. So that's just amazing. We're just very lucky to be there.
Yeah, David?
I think on the cross-border side, we see a lot of capital coming from China into the foreign markets. And we're seeing that not only in all the well-known companies that we've talked about today, but also in what we would consider mid-market type companies in China that have good balance sheets, looking for growth, stockholders that they're trying to excite with perhaps acquisitions or investments in places like Silicon Valley. So we're actually seeing a lot of companies that probably aren't that recognizable to the average person here in Silicon Valley, in the tech space, because they may be in sort of the broader digital media ecosystem or maybe making set-top boxes and the like. And those companies are looking for innovative technologies and growth opportunities outside of China. So I think one impact of slowdown is search for growth, and Silicon Valley is a source of that.
I would just echo what you guys are saying. I mean, a lot of people forget, if you look historically, is that during periods of slowing economic growth are actually when most of the interesting technology companies emerge, right? So 2002, people were like, oh, dot-com's over, economy is crashing, it's terrible. Okay, how about PayPal and YouTube and Google? And these are pretty significant companies. Even going further back, I mean, Microsoft and Apple were coming out of the early 80s. It was not a good economic environment in the United States. And, a slowing economy in China, I mean, you're talking about the CAGR of a company there, the annual growth of a company there, a technology company going from 100% year over year to 95% year over year, right? So it's still growing really, really fast. So, there will certainly be an impact, but I think the future is still very bright in China.
One tip for people want to partake in that trend is buy more property here, especially in Silicon Valley. Buy in Menlo Park, buy in Atherton, buy in South Bay. Because as long as real estate price here is below $2,000 per square feet, you still have a very good chance to see growth. Because that's how much you have to pay for prime spot in Beijing and Shanghai right now. You want to buy a house in Beijing and Shanghai at that price, or you want to be here in Menlo Park, Atherton? It's a no-brainer. So if growth slow down, all those companies that have cash on the balance sheet, they will pump into real estate. Won't be in China, will be outside of China.
Yeah, exactly. So the Chinese money is going to pump up the prices here. It's already definitely.
Find out.
Yeah.
You guys are back the wrong time.
I would just like to add more of a social connotation to all the previous comments, because we must not forget that what does the internet represent at the moment for young people in China. Young people are tomorrow's consumers, right? So at the moment, the internet is actually two things for young people. The only affordable way of entertainment, especially for the rural population, which is the secret behind YY's success, actually, in particular for that company. It is also the only way, the only means of communication and self-expression in kind of a open way, despite all the issues around the government checking what's being said and so on. If you put that aside, actually the internet at the moment in China represents the only way for young people to have affordable fun, communicate with other young people and express themselves. That's not going to change anytime soon. So if you keep developing products and services around that side, I think this is obviously a tremendous amount of growth remaining. On the enterprise side, actually the tightening of and the drop of the growth rate is actually very, very good, because at the moment everybody was running kind of on a hype. When companies running on a hype, they're seldom focused on productivity. They seldom focus on trimming the fat around their operations and so on. So once we start going into the cycle where the Chinese, starting from the SOEs all the way to the private sector, are going to start really paying a lot more attention to how they can cut down costs, how can they increase their efficiency, how they can increase their productivity. This is where actually the entire enterprise software side is going to start happening. And it's an entire industry, and people forget it's a bigger industry than the consumer internet, at least over here.
The other thing I'd like to think mentioned is that China's economy growth might be slowing, but it's growing at from a much larger base than it was even 10 years ago, almost twice the size. So things, as they get much larger, tend to slow down. The other thing that we like to think about is it's more like an onion, where the outside skin might be growing at 7.5, but as you go down and peel the layers, some of those smaller sectors are still seeing quite dynamic growth. Some of the private SMEs are still seeing 30, 40, 50, 100% year-over-year annual growth, even though the big outside of the onion might be growing much slower.
Yeah, I like that analogy. How has the quality of the China entrepreneur changed over the past few years, and how would you say it compares today to those that you find in Silicon Valley? Is the gap narrowing? And if so, how much? And will it ever catch up?
It's almost apples and oranges. I mean, there are a lot of great teams in the Valley for sure. It's still a great place for innovation. But increasingly, we're seeing teams that have American CEO or a European CEO. And on the founding team, there's someone from China who had been for a while, or someone who has worked in China recently and came back. And that's the kind of team that I think for a lot of us on the panel would love to back. Because they know what are the stuff that could work in China, that could work here, but their peers I've never seen before. Most of the US company are good at building a tool, an app that gets a lot of traffic, and then figure out some kind of advertising model or mechanism to monetize that traffic with advertisers, whether it be game developers or from publishers or from brands. In China, because the online advertising market is much smaller, about 1/5 the size of US. Users have to figure out, the players have to figure out a way to get users who want to pay money, like Chris was saying earlier. That's why when hedge fund guys look at numbers for Qihoo, numbers for a lot of game developers, especially in China, when they see $200 US a month spending, they think that is some kind of scam. That's because they never really live in China, live in tier 3, 4 cities. If you want to spend $200, $300 a weekend to take your family out to dinner over 2 meals, or you want to do that on a server and have a chance to be the king of the server in front of 1,000 people. I think the obvious is very obvious which one gives you more pleasure. And when that happens, there's a lot of room for growth in the online space than is in the offline space. And that kind of mentality, that kind of know-how, is something that a lot of US players do not have, never seen before. And so when Facebook spent $19 billion by WeChat, by WhatsApp, a lot of people in the US think that's stupid. That's because they've never seen a Line, they've never seen KakaoTalk, they've never seen WeChat. So they don't know how profitable these companies are or could be. And if WhatsApp just copy what these guys are doing and figure out how to do it, it will be an immensely great acquisition for Facebook. Even without that, it's a great defensive move because people are just spending more time on mobile messaging now. And Zuckerberg is smart because he knows what's going on outside the US. A lot of people in the US do not know that. And I think over the next 10 years, models from Japan, Korea, and China will change, not only in the US, but in a lot of emerging markets that things will go.
That's right, I 100% agree, 1,000% agree, actually.
You would know because you had Tiger before.
Yeah,
that's great.
Yeah, I mean, like, even the company that I ran back in the day, that social network in Russia, I mean, the reason, like 70% of our revenues were user pay revenues, because Martin Lau, who happened to be an ex-Goldman guy too, went to my business school, I was like, this guy is a genius, look at what they're doing at Tencent, that works pretty well. So, I mean, you're seeing it in emerging markets now. Like I said, to me, the 3 real centers of internet business model innovation are United States, China, and Israel. And particularly for emerging markets, China is something that companies in those markets look at in terms of what should we be doing. So.
What's the fourth? You also invest in Brazil and Russia and Africa. How do those measure up?
Yeah. Well, they don't. I mean, that's the short answer. I think there are. Don't get me wrong. There's tremendous engineering talent in some of these markets. I'd say particularly in Russia, incredible engineers. But that combination of engineering talent and sort of commercial talent bundled into one human being that
Not
thing,
easy, rare.
that thing is really, really rare in places like Russia and Brazil and Africa and even India. It's not very rare in China. The quality of entrepreneurs there is very, very high relative to those other emerging markets.
Two anecdotes. I still remember in 2005, Tiger Global helped us set up a bunch of trips for a young guy by the name of Yuri. He went to a lot of companies in China, met Tencent, met Adi, met every single one of them, and parlayed that into building an interesting empire, budding empire in Russia, Eastern Europe, and take that and invest in Facebook and Groupon. I mean, when I want to track his career over the last 5, 6, 7 years, it's impressive how someone can learn something outside of U.S. and leverage that to become a kingmaker in the U.S. And that is just amazing investing.
100%. So Yuri was the guy behind Mail.ru, which acquired Forticom, the company that I ran, right? And when DST, Yuri's firm, was thinking about investing in Facebook, gave me a call, and they're like, what are you guys seeing in terms of your user metrics and how much you're monetizing? And then said, well, wait a second, you guys have 100 million users. Facebook has way more users, $10 billion, that is a steal. Are you kidding me? And it was a super smart investment. Playing that geographic arbitrage.
Exactly.
That's why I do what I do.
And Tiger Global started that. And so it's, I talked to Scott Schleifer, and he said, you know what, China and US, you will make 80% of worldwide growth in tech land over the next 20 years. Those are the two markets to focus on. Israel has innovation and technology that could be imported into these big markets. And if you're not in multiple markets investing over the next 10 years, you will be screwed one way or the other. Unless you are the top tier firm in this side of the road, just invest in the US, you can get by. Everyone else will get crushed. That's why this job is so interesting. It changes all the time.
I'd like to put a little bit of a different angle in your original question and kind of separate between first-time entrepreneurs and serial entrepreneurs, because I think everything that you guys have just been talking about is mostly referring with talking about serial entrepreneurs. And when it comes to serial entrepreneurs, the whole process that takes place in China is just unparalleled. It is so much more competitive. It is so much more difficult to build businesses. You have to cater to a so much more demanding user base that the ones that survive and succeed are actually, you cannot say superior, but they're actually like top of the top. Yeah, exactly. But when it comes to the 20-plus-year-old first-time entrepreneurs, there is still actually quite a gap between Silicon Valley and Beijing. At the moment, I mentioned Beijing because it's more than 50% of the tech activity in China, and Shanghai and all the other cities are still a distant second. So I would say that the gap is closing even in the first-time entrepreneurs, but actually the level of sophistication of a 26, 27-year-old, 25, 24-year-old Y Combinator alumnus first-time finder here with their equivalent Chinese first-time entrepreneur is still actually a fairly far cry. There's a couple of things like that can immediately be said, like for example, the product and tech entrepreneur in China is so unidimensional still today, in doing one thing and doing one thing fairly well, but actually being almost completely ignorant of the vast majority of other things, which is why as a seed stage and early stage investor or an angel in China, you have a huge obligation and responsibility and time investment that needs to be put in coaching and mentoring. But this is not because people are born this way, it's about because they are subjected to an ecosystem that is nowhere near as sophisticated as Silicon Valley is. A kid that's 24, 25-year-old first-time entrepreneur here is subjected to a culture that, first of all, is completely open, and a sharing culture. Whether you can ask a question, you are 2 degrees of separation away from everything that you want to know, and there is a reciprocity effect, and actually people do share here. It's actually extremely blatantly obvious to me in the last 2 months that I've been here, what a huge difference there is in sharing culture between the two ecosystems. So, you know, by being subjected to Silicon Valley, you already find out about term sheets, about negotiation, about how to pitch to the entrepreneurs. I've been to some pitches, and we've reviewed more than 100 companies in the last you know, few months for our own US activities, and I'm sometimes my jaw drops. And where is this kid learn to talk like that? You know, I don't even have a chance to ask a question. You know, he's answering everything I wanted to ask before I even get there. But that's not the case in Beijing. Not yet. We're getting there, but it's not because they are inferior in terms of quality. The Chinese entrepreneurs, it's because they haven't had the chance to be subjected to a Silicon Valley type ecosystem. On the flip side, there is another phenomenon though that is worse off here, and it is also caused by so we said all the good things about Y Combinator and the likes, but there's also the negative part, and that has to do with the exit phenomenon and the acquire phenomenon. So the Chinese entrepreneur, because of the lack, although that's also changing in China now, but because of the lack of an early exit acquire type of environment, by comparison to what exists at the moment in Silicon Valley, is obliged to plan for the long term. A lot more than the equivalent Silicon Valley entrepreneur. In Silicon Valley, this acquire phenomenon and the early exits and the quick flip overs, because technical talent is in such a high demand, you know, you have nothing to lose as an entrepreneur here selling your company, you know, for just returning the money to your seed stage investors with a little premium and so on. If you're going to get a $500,000 to $1 million package individually the morning after you sell your company, where is the pain point, you know, in that? And it's such an extensive phenomenon at the moment here that it's actually changed the culture of young people here building companies to sell them in 18 months, in 2 years, in 3 years, or actually not that long. And then they're not building for the future, and they're starting to make some sloppy decisions. There starts to be some complacency and so on, because they can get the easy way out. Now we don't have that in China, and that actually, on the flip side, is to the benefit of Chinese young entrepreneurs. But there is convergence, that's for sure. I don't know how long it will take, but we're converging.
I'd love to add to what you just said. I think that is such a smart insight, the ecosystem point in particular. You know, in the Valley, there's been technology companies selling themselves or going public for a very long time. And that's just created such a remarkable ecosystem of, you know, you saw some of the entrepreneurs up here earlier that worked at Google, right? And, you know, when you're able to work at these tremendous technology companies and learn best practices and then leave and implement those best practices, one of them, I think the guy from Wish was talking about, look, it was all about matching, you know, I've been spending my life in matching, and this is another matching problem, right? And I think now with Baidu, Tencent, Alibaba, YY, a host of others in China, you're starting to see the beginning of that kind of thing take place, and that's why innovation is really starting to happen in China. In other markets, it's even earlier. It's like China was like 5 or 6 years ago. I mean, Russia, how many publicly traded internet companies are there? 2. Yandex and Mail.ru, right? India, you're talking about 3. You know, Brazil, you're really talking about 2. And so you need these sort of success stories, first of all, to attract young people to say, well, I'm not going to go to the US to try to get a job or go to the Valley. I'm going to stay right here in Sao Paulo, or I'm going to stay right here in Dubai, or stay right here in Moscow, because I can build $1 billion company. You need that role model. And then number 2, you need to be able to work at these companies and learn best practices from a company that's actually made it, that's reached escape velocity. You learn those best practices, and now you're starting to see some really good entrepreneurs, smart guys who used to work at Yandex or Mail.ru or Ozone in Russia, guys who used to work at Mercado Libre in Latin America, not necessarily B2W, but Mercado Libre. And so you're starting to, it needs those sort of exits from these markets to create those ecosystems. And China's just, outside the US, has just had, you know, I mean, it's the second best place for exits, historically, in the tech space. So I think that's an incredibly insightful point you made. Very insightful.
Another anecdote shared in 2012 summer, in the span of 3 weeks, 3 of the top 5 Indian funds, venture funds, came through Beijing. And I was one of the people they met. And all 3 funds have gone through our entire portfolio. You know, every single one of the deals that I did, and started asking very detailed questions. on how the model works. And you'll be surprised that they know what's going on in the US, but they know for India as an emerging market, back then the internet population in India was about 70 million. It's roughly the same size for China back in 2003. And that was a tipping point for China. There were enough people on the internet to do stuff. So that the Indian ones were asking a lot of questions. And one of the things they shared was that there's the user don't have the habit of paying for games yet. And so that was the next key signal. Even when that started to happen, then you can see that there's more relevance. Look at what's going on in China. Otherwise, most of the company that's doing well now is doing some kind of e-commerce, from travel, make trip, and then to with a Flipkart, and then Snapdeal, that kind of company doing e-commerce exactly. So it's very interesting to see how these big emerging market with a sizable domestic market try to figure out what are the key things, key models that could make it tick. And that's very fascinating. And another comment to add to what Chris was saying, China internet space like Yangpu in the martial art books, any young entrepreneur, whatever you're building, if it's interesting, it gets copied by someone who's bigger, who's just as hungry and with more resources. And if not, they will bury you with a lot of negative comments from their friends in the media space, in the blogger space. So the amount of negativity you have to overcome as a young entrepreneur is tons. But those that can survive have a chance to make it big. The founder of Xiaomi was struggling as Kingsoft, a Microsoft clone or of sort in China. He struggled for 17 years until he realized that he needed to start anew, go out and catch a big trend like mobile and Xiaomi. So people think that, he did a lot in the last 4 years, fast rising company. The guy paid his due for the previous 17 years. And I remember when we connected the third highest ranking guy, Carlos, at Amazon to meet Beijing, they can tell him, Carlos, thank you for buying Zhuoyue back in 2004, which later become Amazon China. It took your 10 million that I got from that deal to now 1 billion. That's my stake in Xiaomi. Without that initial 10 million, I will never get to where I am today. But the dues I paid prepare me for today like this.
Hans, you brought up the point of maybe a Silicon Valley venture firm that only does the U.S. Does that exist? And is it possible to exist like that?
If you're in the tier 1 firms and you're very good at what you do, you see all the top deals, yes, you can still make it here. But everybody in the room knows that the top 10% of the firm makes 9% of the profit in business. And that kind of a contract will only get greater. Having been back here only 6 months, like Chris is saying, there's tons of interesting stuff going on. Hopefully, the culture won't change, and being in San Francisco doesn't help. There's too much distraction at night. It's hard for people to code until midnight, like no more startup do, because there's lots of going down the street to go to a party, and afterwards you may not want to come back to your drunk. So hopefully that kind of stuff will go away, and eventually more sustainable companies will be built. But in general, the kind of talent here, the kind of knowledge sharing, hearing Wish CEO interview and the way he talks, it's hard to imagine someone who's of similar age to be as articulate in China. When I went through YC demo day for the first time in 2001, I remember it was in August. It was probably the most depressing day of my life. Because everybody is so articulate. There's not a fluff there, because everything's new. But people are so articulate, address all the issues that VC would have in a 5-minute speech. I was like, wow, I don't see that in China. But again, how sustainable are those some companies, and how much with a young entrepreneur stick to it? That would be very interesting in the next 5 years, 8 years.
So the three that are in the middle here, how's your lifestyle different now that you're back here in the Bay Area versus being in Beijing or Shanghai? Alex?
Clean air, clean food, no toothpaste contaminations or dead pigs in the water and things like that. No, I mean it's great being back here. I mean I was over there for 7 years, and I was always intending to come back and have that. I wasn't born and raised in China, obviously. So it was it's super exciting. It does remind me a bit of the investing in the 99 days, where it's a little too much, a little over the top, too many parties. But it's in some respects there's I think there's a lot more activity out here than there is in China on a relative basis, and so that's it's very exciting to be back here. And ski in Tahoe and wine country in Napa, live a good life.
A slightly different perspective from Alex. Of course, obviously, from a family perspective, enjoying it tremendously being here. But I think for us foreigners or Laowais, are called in China, there's very, very few foreigners like Alex and myself that have actually spent the amount of time in China, and it's such a tough effort to pick up the language, to create your own network, build your own resource pool, start building your career. And I always say when other foreigners ask me, what does it take? It basically takes a 10 to 15 year plan, just like the Chinese government. Long-term plans. It's exactly the same. It's an investment. It's a lifetime investment. If you want to go there and really do something successful, you have to have that much patience and persistence. So for me personally, cutting it at the 7th year is cutting it short. And I didn't intend to do that. And if I had the option of remaining in Beijing, I would have, because I felt I was just personally at that inflection point when things start happening for you. But then we got a very nice, cute, amazing half Greek, half Chinese baby in the family, and when you see that little thing, you just can't responsibly have him grow up in that environment in Beijing. It is very, very sad, but it's true. I cannot be a responsible father having my son grow up in that environment. It's as simple as that. So end of discussion, end of story. And you can't complain being here. Okay, I don't want to present it as this is an okay option and so on. It's a wonderful option. I mean, this is a wonderful place to be. But I think for foreigners that have spent the amount of time that like Alex and myself have spent over there, cutting it short is a shame for all the effort that has gone. That doesn't mean that we're not connected to China or working for a Chinese or partly Chinese fund or whatever it is the case, but it's certainly a long-term investment.
And you're still traveling there regularly, right?
Quarterly basis.
Yeah.
So of the three of us, I probably travel China the most. My goal, and it could change, right now is 50-50. And it's tough. I feel I'm busier than I was, and I was one of probably the...
You just don't want to be taxed here.
Well, I'm one of the probably most hardworking VC and known as such, perceived as such in China. But I feel that being here, the environment is great. The demand on time is greater than before. Because you have two markets you have to service. And unfortunately, I carry a U.S. passport. So even if I was working in China, I'm still paying U.S. taxes, like Alex is doing. So it doesn't make sense to have kids grow up paying U.S. taxes for, polluted air. So, like Chris said, irresponsible father should leave them here. And I have 2 kids, 6 and 2, so it's about time.
Good. Questions from the audience. Christine Liu.
Hi. So I'm from an entrepreneur's perspective. I've been in China since the 90s and go back and forth. I used to live there, came back here. Where are the women founders? It's always been for me in the first dot-com bubble in the 90s when I was in Shanghai. I was always the only founder or only tech, woman in tech there. And you see a lot of improvement here, I think, in the past year because of awareness. What is that? Is there a pattern matching thing going on in China as well when you guys look at deals where time and time again you're seeing the same type of founder, and where are the women?
You heard from all three of us how tough it is to build internet business in China. If for women to want to go through all that, it's incredible women. And
the Chinese women 很会吃苦.
I know, but their parents may not want them to.
Right.
And so pure pressure and all that stuff makes a lot of them think twice. And some of the very, smart ones are CFOs, COOs of big companies, like, at Sohu and then Juren Jiang. So they are, Sina also. So they are good women executives, but they end up willing to take less risk and not take the star risk as much to be senior executives in the companies. They are slightly more female VCs who do investing in China. You know, Jenny, my partner, is one of them, and there are several others. It's good to have them. I hope there are more, because over the next 10 years, you will see female consumers play a much bigger role both here and in China. So I'm hoping that as there are more successful women brands and e-commerce platforms emerging in the US, it will inspire and make it easier for women entrepreneurs in China to want to do the same, and for us to invest in.
At the end of the day, don't forget, 妇女能领半边天，毛泽东。
The only thing I would add to what Hans said is actually there's more than meets the eye, because if you see the founders and CEOs, then yes, there's very little at the moment. The ones that are out there, they're probably the best, even best of their male counterparts, because they have survived that extremely tough environment, and there are a few such cases. But if you're looking at women co-founders within startups with specific functional roles, not that of the CEO, it's actually more than you may think. And more and more coming from the ranks. Because at Innovation Works we have the privilege of having like hundreds of young guys working around us physically in our space in Beijing and in Shanghai. I can tell you there's a lot of female team members. From engineering to product to business development, doing HR, whatever you can possibly think. Yes, not that many founder CEO roles, but actually more and more on very important functional roles. More than meets the eye, actually.
I just want to add to that. I think a lot of VCs and entrepreneurs, both in China and in the US, haven't really, I really like your question, because didn't really realize how difficult it is for a woman entrepreneur. Just an example, one of my good friends, and she not only as a woman entrepreneur, you have to have great education, good experience, and a good idea. And also you have to overcome unimaginable difficulties. She was a Stanford graduate and worked in Google for many years. She started a company called Mango, which has already been successful over the years. But when she was raising funds, and so the first 9 VC told her, I would have invested in you if you were a guy. And we don't know, if we invest in you, after a year, you might get married, you might quit the business, you might have babies. That's exactly the reason we cannot invest in you. And so that's kind of, maybe there's a Chinese mentality a little bit in there. And also, I think women around the world all facing similar problems. So I really appreciate Christine's question, and I think VCs and entrepreneurs and also the whole entrepreneurship society needs to support women entrepreneurs really more.
Another question from the audience? Yeah,
Totally agree.
Yeah, we can just pass the mic back.